Ooh, costing graphs. I always enjoy these. Now, there's two things you have to watch out for in a costing graph question. The first thing I like to watch out for in a costing graph question is the y-intercept. Remember, that's the y-axis, isn't it? And this is the x-axis here. The y-intercept is where does the costing line cross the y-axis? If it's at the origin here, what that means is that when I've got no units, no activity, I've got no cost. And that tells me that if there's zero cost at 0 units, this must be a variable cost only. Whereas here, if the y-intercept is above the origin, what that means, when I'm making 0 units, I've still got to pay some cost, and that means there must be a fixed cost. So the y-intercept tells me whether there's a fixed cost involved. And the second thing I'm looking at, the gradient, how slopey is the line? How steep is the slope? Well, the steeper the slope is, that means that when I make an extra unit, I have more cost. It tells me how much variable cost there is per unit. The steeper the line is, the more the variable cost is per unit. If there is a flat line, it means there's no variable cost per unit. So those are the two things I'm looking out for in a costing graph question. Now let's read through the scenario and work out what kind of cost we're looking at. Up to a given level of activity in each period, the purchase price per unit of raw material is constant. Okay, it's raw material. And raw material, I'm already thinking it's a variable cost. Each time I make a unit, I need more raw material. After that point, a lower price per unit applies to extra units purchased and retrospectively, so go backwards, to all units already purchased. Oh, what a strange cost this is. So when I buy materials, up to, let's say, 1,000 litres or something, and we'll make that point there. So up to 1,000, I pay a certain variable cost per unit. And then when I buy more units from them, I get charged a lower price for all new units, and I get a discount on the units I've already bought. So my overall cost drops. So which of these graphs describes that? Okay, this first one, I like it because it tells me it's a variable cost because of the intercept. And look what happens to the gradient. It's a steep gradient to start with, up to this purchase point. Then the overall cost drops and the gradient is less steep, so the cost per unit drops. That one looks like it's the correct answer to me. But let's make sure the other ones are incorrect. So this one is a fixed cost because of the y-intercept here. So I'm pretty sure this one's not right, but let's doubly eliminate it. Look at the gradient. It's the same steepness both before and after this discount point. So that one can't be right because I get a lower price per unit from that point onwards. It would be like that. Okay, how about this one? Well, I like the fact that it's a variable cost down here. The y-intercept is 0. And oh look, the gradient is getting less steep after this discount point. But the thing that is missing here is the slightly weird thing of retrospectively getting a discount on the units that I've already bought. So what I would expect to see is that my total cost drops. This graph here describes a variable cost where I get a discount only on new units, not on the old units as well. So this one is incorrect. Okay, and then looking at this fourth graph, well, this looks like it's got the correct y-intercept, doesn't it? It crosses at the origin. We've got a steepness of gradient showing variable cost up to the discount point. Then the overall cost drops. Excellent, that's me getting the discount. And then look at the gradient. It's a little bit more shallow. It's not as steep. So this one looks correct as well. So which one is, well, 1 and 4 both look like they're exactly the same to me. They both look right. So we must have missed something. What is it? Ah, now I see what the difference is between 1 and 4. If we look at graph 1, our new variable cost per unit line here, If we extrapolate this line out, it doesn't go back to the origin. And so at this point, it's becoming a fixed cost, or certainly an element of fixed cost within it. Whereas this fourth line here, it does go back to the origin point, which means this one remains a variable cost, even at this portion here. Oh, what a nasty question. If you went for number one as the correct answer, you fell for the examiner's trick, which is looking for the first answer that looks okay and just plugging for it. So exam technique, go through all of the options thoroughly before deciding on the right answer.